This is Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today. Once again, my tag team partner and colleague, Mr. Al Connickson. Al, how the heck are you doing today?
I'm feeling pretty good. The sun's shining. What's not to like, right?
Since we're tag team partners, we could be in the WWE. What do you think about that?
Wouldn't we be? We would just be fierce, wouldn't we?
We would be.
Well, it's because somebody would be afraid they would hurt us.
You're right.
That's where the fear comes in.
Yep. It's always great to be back talking about the financial markets, not WWE today. But that's exactly what we're going to dive into here today. Is we're going to get into how these financial markets really work. We're going to talk a lot about financial literacy. Before we do that, as we know, the market was actually down slightly this week. Pretty much all of them: the Dow, the Nasdaq,
right. A little bit,
the S&Ps. Gold was up a little bit. The dollar was up. Oil had a pretty big down week. It basically erased the gains that we had talked about a couple of weeks ago. We're going to get into some currencies as well today. The dollar yen, that currency pair was down slightly. The Great Britain pound was down as well. So we got some up markets, we got some down markets, but we're going to talk about how they all tie together today. We're going to get into the stock market, futures, Forex, and options. Before we do that, Al, what's been some of the crazy things? I mean, we had some great movements this week. The market was down, which is actually a phenomenal thing as a trader investor. What's been happening? What's been causing some of these great moves that we're seeing?
Yeah, I know a lot of people are saying, kind of scratching their heads, saying, "What do you mean the market's down and that's a great thing?" It really doesn't make any difference to us whether the market goes up, whether it goes down or sideways. The only thing we really care about, Josh, is that the market opens. As long as it's open, there are opportunities there. What's been causing some of these moves? Well, we still have the vaccine issues, the coronavirus, but what really has kind of taken center stage now is the concern about interest rates and inflation. So those are things to keep an eye on. But again, those are things that might move the price of something up or down, or cause the institutions to be taking a position, maybe looking at an upward bias or downward bias. But that's fine because there are opportunities in all directions. And you mentioned a few things there in your introduction that a lot of people probably are not familiar with.
Yeah.
But they're just different opportunities. They're different things that are available to invest in that can be really geared towards you personally. Everybody's a little different, has different personalities, different goals, different expectations, and there are a number of different things that can be utilized to help you to achieve your specific goals.
Yeah, and the reason I do that, Al, is these, like you said, they're not new; they're just a little bit different, and that's why when everything ties together, it's just being able to understand multiple things like the currencies, how they're dictating certain things, how some of the commodities do. But before we get into that stuff, how do these markets really function, though?
Well, I think a good question to ask is why are you interested in the financial markets? Why are you listening to the show, for example? The answer is that you might think that there's some benefits to you financially by being in the markets. If you think it's possible that anybody benefits, and think about it, how about Warren Buffett? Warren Buffett has done pretty well. If you think that it's possible, then wouldn't you want to put as many odds of being, putting the probabilities of being beneficial to you in your favor? So the question then is, how do you increase those odds? And it starts with knowing how the markets function, regardless of whether it's the stock market or the options market, foreign exchange market, futures market. And most importantly, it gets into why and how price moves or how it changes direction. And the answer is really fairly simple. It's Wall Street banks and institutions. It's the big players we often refer to that as smart money. Those are the people that participate in the market with such huge amounts of money that they can move the price. It really gets down to that basic relationship between supply and demand. And in the financial markets, it's buyers and sellers. And that's something that really can't be argued. It's a fact. If there are more buyers of something, price will go up. If there are more sellers, price will go down. And those institutions and the banks, they are creating that kind of movement because of the huge amounts of money that they're investing.
Yeah, and this supply and demand, that's not something new. That's basically how anything in life moves. I mean, think about it
Correct.
in the housing industry. If there's more supply, price is probably going to go down. When there's more demand for things, price is going to go up. Just think of it as an auctioneer in a way. When there's a lot of people bidding on something or looking to buy something, price is going to continue to go higher until there's no more buyers. And we're going to get into more of that in the next section. But it's how to put the odds in your favor, how to in understanding how price actually moves and also changes. And Al teaches investing classes that we do right here at the Academy and talks more about, why the institutions are moving price, how they are doing it, and how us as the average investor can potentially identify where they could be buying and selling. But it's based off a price chart. It's a skill that you have to learn.
Sure.
Coming up next, Al, I want to continue this discussion about supply and demand, how the markets actually function, but how the public or the average investor sometimes are trained to do things how Wall Street wants.
Mhm.
This is Josh and Al, Investing with Confidence. We will be right back.